Hello and welcome to this video. Today I've got one trading strategy and we're going to look at how it performs across 8 different markets. Now I'm here to prove or disprove that one trading strategy can in fact work well across some different markets, because quite often you read or you pick up on YouTube, etc. People will give you a strategy and they'll say, take this away and trade it on all the Forex pairs. And it's not always the case, but we're going to look, like all my videos, anything I say is not my opinion, it's backed up with facts. So this one trading strategy, I've programmed it in the software that I use, which is Multicharts, and I'm going to look at it across 8 different markets with data for each market of over 10 years. So it's going to give us a really good idea of whether or not the strategy is valid across different markets. And once we've looked at the charts, then I'll give you my opinion and you can make your own mind up whether or not a strategy should work equally as well across some different markets. And should there really be a strategy that, you know, a one-size-fits-all type trading strategy that you can use over whatever instrument or market you want. So first of all, let's go and have a look at the screen. I've prepared for you 8 different charts or 8 different markets with the same strategy, and we're going to look, ultimately we're just going to look at the performance equity curve of each one and make our judgments from there. Okay, so we've got the 8 charts and 8 different markets here prepared within Multicharts, and we're going to quickly have a look at the performance equity curves of each market. Same strategy, different markets. Okay. First off then, in no particular order, we're looking at this chart here, which is for the FTSE 100. We'll have a quick look at the equity curve, and this is the equity curve for nearly 10 years of data. And we can see that, sure, there was good periods, bad periods, but overall okay, yes, it did make a little bit of money. This down here, this 100,000, this is the starting equity. So anything above that obviously is profit, below is a loss. So yes, over that period it did make money, but that's not something that I would choose to trade. I don't think this strategy works particularly well on the FTSE 100. Next, we'll look at this one here, which you can see is pound Japanese yen Forex pair. And even worse, that's a terribly choppy equity curve. But you know, notice that, for example, recently, from let's say April 2019 until now, it's actually been working really well. But if you were to trade this over the 10-12 year period that we're looking at here, it's not a particularly nice strategy, is it? Next one, pound versus US dollar. And again, started here at 100,000. We saw a massive downward period, and then it recovered, and then it went sideways, and we've ended up almost at 100,000 over 12 years. Not something I'd want to be trading, would you? And the last one is looking at spot gold, and again, look, massive down period, recovered a little bit, down again, recovered, and ended up below 100,000. So 4 quite different markets there, and as far as I'm concerned, I wouldn't be using this particular strategy on any of these markets. So we've got another 4 Forex pairs here we're going to look at. First off, let's look at US dollar versus Canadian dollar. And that's a bit of a different picture. Look, started at 100, went all the way up to 120, went sideways slightly, but straight away we can see that this strategy works a lot better on dollar CAD or US dollar Canadian dollar. Next one, we'll look at the Australian dollar versus the US dollar. Again, look, from 100,000 right up to 140. Again, it's gone a little bit sideways recently, but it's certainly something that was consistently working over the years. Next one is dollar versus the Swiss franc forex pair. And again, well, a bit of a down period to start with, but then look, from about here, so 2011, right up until now, it's been working quite well. So something that I would consider using this strategy on. And the last one is dollar versus Japanese yen. And I left that to the last, save the best till last. I know this strategy works well on this forex pair. So look, what a different story that is for an equity curve. That's actually pretty nice. And if you're interested, by the way, this strategy, you've seen certainly those last 4 markets that I think this strategy is tradable on. If you're interested in what the strategy is, then I'll leave the link below in the description so that you can download that and take that and use that yourself. Don't use it on the first 4 markets that I showed you. So from that quick test, you can see how one same strategy performs across different markets. And I know we had like the FTSE 100 and gold in there, we threw those in there as well, but the rest of them are forex pairs. And people often claim, use this strategy on forex. Well, it doesn't always work like that, does it? We can see, it's not my opinion, it's literally data. This is why, and I always say it, it's very important to test everything you're doing. Don't just take a strategy and blindly start trading it across different markets, because you just don't know. You need to test everything. Now, why does one strategy work better on some markets than others? Well, I think it's to do with their personality. I believe each market has its own behaviour or personality. This strategy that we looked at was a breakout type strategy, and I know from experience that dollar yen responds well to breakouts. Other markets are much more mean reverting. You're better off buying pullbacks, things like the S&P 500. So each market has a different behaviour, and each market is going to respond differently to the type of strategy that you're trying to trade it with. Some people will argue that you should just take the one strategy and use it over a varied amount of markets, portfolio of maybe 15 different markets. And sure, overall you might make a little bit of money because you've got big diversification. Some markets just aren't going to do very well. Some other markets are going to do really well and hopefully make up for the losses of the markets that don't do well. My argument is, why even trade the markets that the strategy doesn't work very well on? Why not just trade the best markets and then find other strategies that work better on the markets that this strategy didn't work well on? That's my approach. And that's about the end of this video. If you liked it, please give me a like. If you've got any comments, then comment down below. You can email me, Jared@thetransparenttrader. And like I said, if you want that strategy that I showed you there, it's pretty good, works well on those 4 forex pairs, then I'll leave the link for that you can download the PDF that I've written. Gives you all the instructions to trade that. And until the next one, this is Jared Goodwin, and thank you.